Revenue numbers have been a clear positive, the point that you make, Indranil, but I want to come to you, Auradip. As far as this year's performance is concerned and some of the commentary in the economic survey, if I were to ask you to sort of read through the fine print and tell our viewers, what does it tell you about the framework and thinking of policymakers at North Block? The way I would like to describe it is that they seem to be very optimistic. This is the third year of the pandemic. The language seems to have far more optimism than we heard even outside the survey several months back.
Yeah, so I think there are a couple of aspects, right? One is the point you're talking of, which is on growth, right? And again, I think just like my other co-panelists, we have a slightly lower version of growth. Our expectation is 8.7% in FY22 and 7.8% in FY23. And look, I mean, there are various risks at play. But I think that's sort of just one part of the story, right? So you might agree or may not agree with the growth outlook. But I think what's really interesting when you kind of burst through the lines is the kind of broad fiscal policy think that the government has. And I think, excuse me. So there, I think there are a couple of things that kind of stand out. One is it doesn't seem like the government really sees this as a kind of a battle between growth versus fiscal consolidation. I think that essentially the broad sense is that as long as we generate growth, it should help in in controlling medium-term debt. And so there is this sense in the economic survey where they're saying that, look, from a medium-term perspective, we expect the debt trajectory to start inflecting from here. So we are expecting lower growth, lower debt. Secondly, this kind of focus on capex, which has been pretty evident in government fiscal policy for the past 2-3 years, where there's been a lot of focus on capex. Now this year we have a very high capex target, but the government is so far lagging on it. And what the economic survey says is that, look, this is happening because we've had lockdowns, we've had labor shortages, but coming up we are going to see a big ramp up of capital spending. And so, there is that focus on capex, which I think is very important for the budget tomorrow, because, if that really translates into similarly high capex growth. But the other very interesting thing is this whole barbell strategy, which they spoke of, right? Which sort of said that, look, we expanded the safety net for the most vulnerable, but on the flip side, we also remain very fluid in terms of upcoming economic data, and we'll adjust our policy accordingly, which essentially translates to the fact that you could have a large increase in RevEx, like it happened this year, in the middle of the year, if the government feels that growth is lagging, or if there is need for some kind of infusion. And so I think from the budget perspective, what this essentially says is that, if you read between the lines, is that yes, there's fiscal consolidation in spirit, and focus on growth in intent, right? So one can expect strong budget on the capex side, and sticky RevEx, revenue expenditure, just based on the kind of indications we are getting in the survey.
Rahul, let's now talk about priorities that should be incorporated in a budget that is coming at roughly the midpoint of Modi 2.0. It is this government's 10th budget. It is Nirmala Sitharaman's 4th budget. Last year was very well received. What are the broad focus areas that you yourself are expecting from this effort?
So, Siddharth, I think one of the key points about this particular budget will be that, obviously with the kind of revenue outperformance we have seen, the total revenue to GDP ratio is now restored back to the pre-slowdown level, right? So in 2019-20, when the new government took charge, the economy was already experiencing a slowdown, and now those revenue numbers have been restored. Our sense is that, the discussion around fiscal space and, to Aurodeep's point that, capex spending has to remain reasonably elevated. How do you continue to do that at a time when you are balancing both consolidation requirement and also, the fact that fiscal support is very important to growth is likely to be a key thrust area, right? So this balance is something that, a lot of us will be looking out for tomorrow in their numbers and also in terms of their guidance. I think one of the key, opportunities, or, this also came out in the economic survey, is that the government was trying to do quite a few things, in the run up to the pandemic. There was a lot of effort to revive growth, and a lot of those things had been put on hold largely because the pandemic took hold. And so, now the government seems to be coming to a point where the mind space and the bandwidth to execute on some of these things is increasing. And, even today we had one more announcement of a potential privatization of a particular state-run company coming through. So I think that probably is something that I'll personally be looking out for, is that how much of an emphasis is there on moving to a post-COVID environment where fiscal priorities will be not just to support growth, but also provide some consolidation pressure.